I'm here with Idris Jala, who is Minister in the Malaysian Prime Minister's Department, and he's responsible for looking after catalyzing economic growth in the Southeast Asian country. Welcome, Idris.
Thank you.
Now, Malaysia is one of the fastest growing economies in Southeast Asia, but we have a slowdown in China. We also have a very interesting thing going on in Malaysia right now, which is your government is tackling the fiscal deficit, which I think it's fair to say is one of the few governments in the region to actually be doing this. This means there are a lot of different factors bringing to bear on the Malaysian economy. And next year you're going to introduce a general sales tax. How is all that going to pan out?
Over the last 4 years, we've been gradually rationalizing our fuel subsidy, including sugar subsidies and others, electricity. So we've been gradually doing it. We've reached a point now with, if you take a look at that agenda, with crude prices coming down, I think you probably 1 or 2 more rounds we're already at market rate.
So the fact that the crude price is coming down actually helps you?
It helps us because we're now close to that. On GST, the public accepts it too, that we have 29 million people in Malaysia, and of which 1.7 million people are registered taxpayers, but only 1 million people really pay tax. Most of ASEAN countries have their tax GSTs at 10%. We're only going to do it at 6%. Our view today is that when we do that, how do we make sure that we protect the poor people?
Now, one of the other things that's happening, again looking at the oil price, is that your state oil company, Petronas, which provides an enormous share of government revenue, it's doing not as well as it was. How are you going to manage this balance between probably lower government dividends, so-called, from Petronas, which is really a very large amount of money, which is likely going to be lower, and then the addition of GST?
The strategy for us going forward, and we've already been following this for the last 4 years, was to reduce our dependence on oil and gas. Today, that number has dropped from 40% to already now 30%. In the year 2009, our deficit stood at minus 6.6%, and this year we hope to bring it down to 3.5%.
How vulnerable are you to a slowdown in the Chinese economy?
67% of our GDP today is domestic consumption, and then 22% of our GDP is coming out from investment, predominantly private investment. So net trade is actually very small for us, less than double digit, probably about 7%. So that means export minus import. So the slowdown on the global front does not impact us as much as many other countries because net trade is relatively small.
I'd like to turn quickly to reform of government-linked companies. In some countries they call them state-owned enterprises. In Malaysia it's a slightly different structure. Malaysia's talked for many years about reforming GLCs and that not enough is being done. Would you accept that?
Well, the first thing that was done when we started the program for the government-linked company transformation program was to bring in professionals to run them. If you take a look at the value generated by our market capitalization for all the government-linked companies, they've outperformed the rest of the market within the stock market. Where it does not make sense for government to do business, we should gradually withdraw from that.
Do you think it's moving fast enough, though?
We have made some progress. I would say that when we first began this work, we identified 33 companies, big and small, that we government will withdraw from. And we have already now implemented more than 30 of those on the list that we've withdrawn. For example, Post Malaysia, that's been privatized. But I think just like Singapore, Malaysia and Singapore, Indonesia and many others, they grew from low-income economy with a lot of government involvement. Now you cannot get rid of that stake overnight.
Thank you very much.
Thank you.